What up, what up, what up? What's up, guys? Welcome back to my channel. It's your boy Crypto Prince, aka C Prince. If this is your first time watching one of my videos, make sure you click the subscription button and also turn on the post notification. In this video, we're going to talk about the Coinbase crash. We're going to talk about XRP. We're going to talk about Bitcoin, and then we're also going to discuss why this bull run will be different from the previous bull run. So let's just get straight into the video. Before we get into the main video, we're going to talk about the price action of today. So we see Bitcoin at 19,270, up 2%. We see Ethereum on 600, down 0.8%. We see XRP up 8.7%. We see Bitcoin Cash up 1.7%. We see Chainlink basically down 0.04%. At $15.50. We see Litecoin up 0.50%. We see Cardano up 6.3%. We see Polkadot down 3.2%, and we see Binance coin up 1.5%. Let's take a look at the biggest winners of the day. So we see Stellar at 21 cents, up 38%. We see Verge up 38%. We see Zilka up 32%. We see NEM up 25%. We see Status up 25%. We see Horizon again pumping up 23%. We see Digibyte up 19%, almost hitting the 3 cents bracket. Let's look at the biggest losers of the day. So we see Head Trade down 61%. We see Bitcoin Gold down 16%. We see Nexus Neutral down 8%. We see Celsius down 5%. We see Reserve Rights down 5%. We see Synthetics down 5%. We see Energy Web down 4%. Gold Industry Insider did show that Bitcoin will increase 20-fold. In a statement, Tapira speculated to see gold traded at $4,000, which is double its current price, but had a far more bullish idea for what will happen to Bitcoin. In Tapira's statement, he speculated that Bitcoin would probably rise by 20 to 30 times its current price, being traded for anywhere between 300,000 to 500,000 apiece. Tapira went as far as claiming that anyone with their ears on the ground in the gold industry won't refute these claims in the slightest. Alongside this, Tapira is convinced that institutional level investors, including finance worlds, are starting to become more likely to invest in their holdings in Bitcoin. Tapira speculated for anything between 5% to 15% of their portfolio will be allocated to Bitcoin. He made further note of the total value of the sector, saying it's worth 100 trillion. This would mean that anything from 5 trillion to 15 trillion in Bitcoin could be shuffled into Bitcoin, which would severely increase the space market cap. Tapira explained why Bitcoin is gaining so much traction, highlighting the simple fact that Bitcoin stands as an edge against fiat. Furthermore, Tapira explained that large investors would have an easy time handling the cryptocurrency once the market cap goes past the $1 trillion mark, much like gold. However, Tapira was quick to note that gold and Bitcoin aren't the same. While gold can be used as a store of value, that's all it is. Bitcoin, however, has multiple facets to it, consisting of the entire network. As such, Tapira has no doubts that Bitcoin will eventually outperform gold overall. So right now we see this is a gold bug right here on the Pump podcast. This is a gold bug talking about Bitcoin going to 400,000 to 500,000, and he's saying that Bitcoin has more to it than gold, because gold is like just a store of value, and he said Bitcoin has multiple facets, meaning it's got more utility. You can do more stuff with Bitcoin, and this is bullish news for the space because over the past few years the gold bugs have been coming hard against Bitcoin. The media has been coming hard against Bitcoin, so this is very good news for the Bitcoin holders, for the cryptocurrency holders, for everyone in the space right now. This is very good news for us because right now we can see the whales are coming in, we can see hedge funds are coming in. The rush of consumers hasn't kicked in as yet, so we see these big guys have to get in for the more speculative investors to start investing their money. So this is very good news for the space. Pundit explained why Bitcoin at 18k in 2020 is different from that of 20 2017. And this article was by Bernice Nyambura. Might have butchered that name. Bitcoin broke above the 18,000 barrier for the first time in December 2017 and reached its all-time high. This is it that some people saying that Bitcoin only went to 19,000, and some people are saying Bitcoin went to 20,000. The thing is that every Bitcoin went to different level and every exchange. There's not really a precise number to say that's where Bitcoin went. Depending on the exchange that you're judging it from, it went to different levels. So the maximum we see is over 20k. The minimum we see is basically 19k, or probably a bit lower than 19k. According to the exchange that they're judging it from, Bitcoin went to 20,000 in December 17, 2017. 3 years later, Bitcoin has breached the 18,000 level for the second time and is eyeing 20k and beyond. Analysts have incessantly been comparing the current price rally at 18,000 to 2017 bubble. According to the analyst Jason Dean, there are many ways in which the two are completely different and may lead to a total different result. 2017 was classic textbook bubble. The rise in 2017 wasn't based on fundamentals, as there were barely any, but purely on fear of missing out, aka FOMO. Buyers constituted mainly retail and amateurs in search of the next big thing. Since Bitcoin had itself reached its peak, it was now considered a gateway to investing in some sort of a new initial coin offering, ICO. ICOs first required investors to own Bitcoin and then exchange them for other tokens. In other ways, the entire ecosystem was different, with fewer on-ramps, close to zero regulation, and no interest whatsoever from financial institutions like banks, hedge funds managers, and corporations. So far they're saying that 2017 was different because mainly it was led by the FOMO. People didn't want to miss out, so that's one. People didn't want to miss out on the next big thing. The second thing was the ICO. In that time, you could have invested in almost any ICOs and make money, because there was a lot of companies starting to come into the space, starting to be developed, and in almost any company you invest in, you would have seen significant returns. So these are the main two factors. However, the cons of 2017, there was fewer on-ramps, meaning there was not enough company to take your money to take out your money to be transferred back to your banks, back to your card. There was not a lot of company that was doing things like that. There was close to zero regulation, so we know that regulation makes, when there's no regulation, a lot of people don't trust the space, so that in return will keep a lot of hedge fund companies, a lot of these big companies away from the thing, away from the space, and no interest whatsoever from financial institutions like banks. So there was no banks getting involved. No one wanted to know about this, because it was like a no-no for everyone. It was a no-no. And then in this bull run, we already see Citibank getting involved. We already see so many different banks getting involved. We see companies like Amazon is using Hyperledger Fabric, which is the blockchain, and we see Coca-Cola using Hyperfabric. We see Coca-Cola also involved in the Baseline project, which is a blockchain product led by Ethereum. We see all these things, we see all these big companies, banks, big institutions getting involved in crypto right now. So we already see that this bull run is already, and this is before the start of the bull run. Before the start of the major bull run, we see all these things happening that wasn't in 2000. So if we're going to compare it, in 2017, there was FOMO. We already have FOMO right now. We have FOMO like crazy, people rushing in to get in, not to miss out. 2017 at the ICO craze. Now in this bull run, there is no ICO craze, so to speak, but we see that big institutions, big investors are getting in, as well as in this bull run, we see the evolution or the emerging of DeFi, and DeFi basically is going to be a big game changer for this space, because basically it's like taking out the money, the financial system of the old world, of the fiat world, and then bring it on blockchain. So there's trillions of dollars in the financial system. There's trillions upon trillions of dollars, and they're bringing that to the blockchain. So these are going to in return bring in all the big guys, and once again the smaller people, the smaller investors that follows the big companies are going to start flocking in when they see these big guys getting involved in the crypto space. So this is very, very, very positive for the cryptocurrency space. Despite the fact that 2017 was only 3 years ago, there were no certified custodial solution like Grayscale. Institutional investors would have been unable to invest in Bitcoin even if they wanted to. So we see Grayscale is the biggest basically asset management company in the space in cryptocurrency, Grayscale. And 2017 there wasn't a company like Grayscale. So Grayscale, you have to be accredited investor to invest in Grayscale, and accredited investors, or you have to meet a certain criteria, which is to have, I think it was over 200,000 earn annual income. You have to have 200,000 annual income, as well as you have to have a certain amount of, I forgot I think it was $1 million, 500k to $1 million worth of assets to be accredited investor. So you see, that's not for like normal people, that's for wealthy people. I think last time I checked, Grayscale was buying 20% of the mined Ethereum, and also they've got a big chunk in Bitcoin as well. They've doubled their standing that they had the previous month, so every month they double what they had. These stating that those who were present in 2017 and ongoing to 2020 rally are the only ones truly capable of seeing the real difference in both markets. And I agree with that. I came at the end of 2020. I came at the end of 2017. I saw where it went to. I saw the puzzle. This is why I'm trying to compare with this, and I'm saying that this bull run is going to be massive for so many different reasons. Technologies like NFT, it won't be as big on this bull run. Next bull run, I believe NFT will be a massive thing, but however, it started in this bull run, and we see projects like Decentraland, we see projects like Sandbox, the virtual reality side of things. This is NFT, and this is also it's mixed with NFT, and also it's mixed with DeFi, because we can sell land, we can buy land, we can build. It's gonna be a big thing in the future in the next bull run. But it starts off with this bull run. So this bull run is gonna be epic on so many different levels, using the pros from the previous bull run, including the pros that we gather from this bull run as well. It's gonna push it. It's gonna pump the price even higher. Also, it says that the coronavirus crisis has found investors in search of a new asset class to preserve their wealth. Key public figures, influencers, and organizations have also recognized Bitcoin and declared that it works. This means that Bitcoin has developed and is now associated with corporate insurance terms such as store of value and inflation hedge. The kind of terms that would attract CEOs, hedge fund managers, wealthy individual investors, politicians, and celebrities. And we already covered the article of what is it, Maisie, the actress in Game of Thrones, Aya. She's getting involved, and we see a few other celebrities getting involved in crypto, buying crypto, and talking about crypto. I think Meek Mills also spoke about crypto, and more celebrities are starting to get involved in crypto. And when celebrities get involved, their fans naturally is going to want to get involved as well. And other stories. So, anonymous crypto will transfer 40 million XRP to Bitstamp. Now, at the recording of this video, XRP is trading above 60 cents. And we see this transfer of 40 million XRP to Bitstamp. And this 40 million XRP was the Genesis block, meaning these 40 million crypto were 40 of the first XRP that's ever minted or ever mined. The unidentified user moved XRP tokens from an address that has been dormant since 2013. So they didn't even touch it in the 2017 bull run, and that bull run saw XRP went to $3.30, I think, and they didn't even touch it in that bull run. Whenever we see a transfer from a wallet to an exchange, it could be a few reasons. One of the reasons could be they're going to use it for staking, but the main reason whenever you're trying to transfer from a private address to an exchange is because you're trying to get rid of it. This is what I'm looking for: a price dip in all coins. whenever it goes up too much, there has to be a retracement. So whenever we see whales like this putting crypto on the exchange, look out for a big dump coming soon, because soon when the price goes to a certain level, these guys are just gonna dump and the price is gonna go flat, and then it's gonna take a bit of time to go back up again. So if anyone that's day trading XRP, if anyone that's looking to trade XRP, just be mindful that there's a possibility that the price could go way down. Bitcoin price now eyeing 20k after XRP shock the market. The price of BTC surpassed 19k on November 24th for the first time in nearly 3 years. It followed an XRP flash crash on Coinbase, which trembled the crypto market. The two incidents could be entirely coincidental, although considering that BTC price surged almost immediately after the XRP drop, there could be a correlation. So basically what happened a few days ago, Coinbase crashed again. And that's the main thing I wanted to drive in this article. This is the main point that I want to drive home to you guys. Coinbase crashed again. This is like the second or third time Coinbase crashed in the last 2-3 months. The second or third time, and that's dangerous. Leading up to the bull run, Coinbase is being crashed, and you can't take out your money. You can't do anything. You might be in the market until it's bear market again. Not wishing that on anyone, but if you continue to only use Coinbase, then that's a big danger, that's a big risk of you missing out on the bull run. You read further on to say the problem emerged when XRP flash crashed after hitting 90 cents on Coinbase. It caused the market to undergo extreme volatility in the short span of time. Bitcoin plunged to around 18k while ETH dropped to $585. Although it is difficult to prove conclusively, market trends suggest that a flash crash led algorithms to cause high volatility. The price of Bitcoin briskly rose from 18,000 to above 18,500, eventually breaking the 19k. When Bitcoin dropped to 18k within just minutes, a supply zone was likely tapped. In other words, it might have been dropped to an area with significant liquidity, causing many buy orders to get filled. There was the interest in XRP, this overwhelming interest in XRP, because it flash crashed to 90 cents. It went up all the way to 90 cents. This massive interest in XRP, everyone is flocking in to buy XRP. That's what caused Coinbase to crash. So imagine when XRP, I believe XRP can go minimum $10. Imagine if XRP goes to $10. What's going to happen to Coinbase? Not just XRP. Imagine when Ethereum goes to 10 to 50k, because I believe Ethereum will go to 50k. Imagine when Ethereum goes to between 10 to 50k. Imagine when Bitcoin goes to 100k. Imagine when all the other coins on the Coinbase goes to all-time high and even above all-time high. What's going to happen to the servers? So this is what I'm saying. Be careful with your money on Coinbase, and also the correlation with XRP and Bitcoin and Ethereum. We saw that when XRP went up, we see Bitcoin and Ethereum dropping, and when XRP and then now when Coinbase got crashed and XRP was dropping and consolidating, we see Ethereum and Bitcoin going up. That's when Bitcoin broke the 19k mark. So we see Ethereum and Bitcoin always moving together, but now we see XRPs like countering Bitcoin and Ethereum, and also sometimes going with them. So that's something to look out for you traders out there, for you day traders. That's just to keep in mind. So guys, thanks for watching my video.